How can SIPs facilitate gradual diversification over time? Your thoughts?
Right. Thanks for having me participate. It's a pleasure. Yes. Today, so we have in India, in mutual fund schemes which invest in the background in Indian equity markets or in the Indian bond markets, also in gold, and also some mutual fund schemes may invest internationally. So. When an investor wants to take a decision that I have a 100 rupees, for example, just academically speaking, and I want to put half of my money into, say, risky assets and half of my money into conservative assets, they have they can decide that I have 5,000 rupees or 10,000 rupees, and 5,000 can go into equity mutual fund schemes, 5,000 can go into debt mutual fund schemes, and within that 5,000 on equity also there can be many different choices that they have, or some amount of money they want to invest into gold because they identify it as an investment for a certain goal they want to assign it to. So because there are a plethora of schemes and a plethora of choices that the investor has today, without doubt there is a lot of diversification possible, irrespective of the amount that one wants to start with, because you can invest in schemes with as small as 500, and in some schemes as small as 100 rupees you can start an SIP. So and gradually you can build it up, as a, if you are a newer investor, you can possibly start with something more conservative, and then you can kind of read the scheme documents, understand the mutual funds and schemes better by reading a little bit more, and then gradually start adding more SIPs or smaller amounts in a monthly fashion, as explained by the panel, to different kind of asset classes, whether it is equity or debt or gold. And you don't really need to have very big ticket of money to, or very big amounts, saying that I will buy one bond in the market because I want to have conservative or fixed income assets. You can very easily do it through a mutual fund scheme.
Absolutely. And speaking of goals, there is also this question on the relevance of SIP when we come to short term goals, because many people think, well, for long term goals, it makes sense. But what about short term goals? Dilshad, let me bring you in for that, because for short term financial goals, like let's say a vacation or even an emergency fund, your thoughts on how can SIPs in specific types of mutual funds, how can they provide a reliable and relatively stable growth trajectory?
Good afternoon to all of you, and thank you for having me on the show today. I think for short-term kind of goals, arbitrage is a very good investment that one could consider. So these are give you an added edge, I would say, where you get the benefit of taxation of a lower taxation as equity funds, and the safety of a debt fund, right? So you get the benefit of and the volatility is also less. So that's why arbitrage is a very good option for a short term investment, ideally suited for between 6 months to a year. And the other options could be either an equity savings or an ultra short term, depending exactly on the investor's time horizon and objective. So, as the period increases beyond a year, then we typically suggest things like ultra short or short term, even depending on when exactly the client would need the money. But yes, to answer your question in simple, I think arbitrage is a very good and tax effective investment for short term goal realization.
All right, now let's look at the long term goal, which is retirement. We had a panel on that, but I want to bring in the context of this discussion on SIPs, the relevance when it comes to retirement. Ashish, let me bring you in for that. SIPs, well, they're popular among retail investors, but the question is, how can SIPs in various types of mutual funds facilitate disciplined and gradual wealth accumulation for retirement? Your thoughts, Ashish?
Sure. Thank you, Gaurav. Good afternoon, everyone. And again, thanks for having me. Now, from a retirement planning perspective, let's assume that retirement is 15, 20, 30 years out in the horizon. Then I think one should consider investing in equity-oriented funds like flexi cap or hybrid aggressive funds to build the wealth. But the key point here is about consistency and gradual progress, right? And I think most of the fellow panelists have spoken about it. Now, let me illustrate this with an example. Now, imagine a monthly investment of rupees 5,000 with a 12% annualized return. In the initial decade, the investor puts in about 6 lakh rupees, and by the end of that decade, the amount is about 11.21 lakh rupees. Of course, this is just for illustration purposes, right? Now, moving on to the subsequent 20 years, the invested amount increases by 3 times to 18 lakh rupees. However, the investment value goes up by 14 times to 1.5 crores. So the point I'm trying to make here is if you're with every incremental linear increase in horizon, the investment value goes up by multiple times. So here, 6 lakh rupees invested in 10 years gives you about 11.2 lakh rupees, and 18 lakh rupees invested in 20 years gives you 1.54 crores. So that's where that is how compounding works, right? The entire gain or most of the gain is back-ended for last 5-6 years. So in the equation of investing, as all of you know, as all of us know, the time is the most critical factor, followed by amount invested and the potential returns achievable. Now, what we observe is many investors are generally fine with the passage of time, but what often hinders long-term investment is investors' behavior. Now, investors tend to become overly excited or anxious when the markets fluctuate, and they either end up booking profits or losses both too early and quit. Sometimes they return, sometimes they don't. Now, this reminds me of a quote by the Greek philosopher Epictetus, who was actually one of the teachers of Marcus Aurelius, the Roman emperor. So he said, it's not what happens to you, but how you react to it that matters. Now, in this context, investors who can set aside their emotions are the ones who can truly benefit from the wealth building potential of investing through SIPs in equity mutual funds. And finally, I think I can break it down to 5 essential ingredients if one wants to build a wealth for retirement through investing in equities, through investing through SIPs. One, they need to invest in equity-oriented mutual funds. Number two, they need to invest for the long term, start as early as possible. Number three, invest regularly. Number four, keep on topping it up wherever possible. And finally, stay invested. Thank you.
All right. Harness the power of compounding, but you need time on your side. But Ashish, to your point of setting aside emotional biases or decisions, that seems to be easier said than done because we see markets going on a high or markets going down substantially. And as they say, let me bring in Mr. Rao, circle back the conversation to him because he touched upon this in his starting address on behavioral biases, often having an impact on investment decisions. So, Mr. Rao, how do SIPs help investors overcome emotional decision making and help them stick to their financial plans during these markets and ups and downs?
Yeah, thanks, Gautam. I think I'll take it from where Ashish spoke about earlier about the behavioral biases, and probably there is one quote which is I think I would like to quote Benjamin Graham, who said the investor's chief problem or worst enemy is he himself or she herself. It is like this is where the biases will come, and this is where when market timing is not possible, and when markets are high we intend to put more money, when markets are low we intend to take out, we do oppositely. It's investing is always not a number game, but it's also a mind game. And this is where SIP comes in. SIP markets are markets are always rational and investor is irrational. And this is where SIP comes in. I mean, where you are also have a discipline of staying put and discipline of investing, and you are not get overwhelmed whatever is happening around. And today there is a challenge, right? Today I am challenged with the social media. Today I am challenged with many other informations. And then last but not the least, the FOMO, fear of missing out, and everyone would like to rush up, which we have seen whether it's a crypto or elsewhere. And SIP is taking all these emotions out, a simple tool which is making you to stay put, and you are investing according to your goals. I think earlier Shalini was talking about how you can base goal-based investment, or when you are looking at short-term goals or long-term goals. When short-term goals, when Dilshad ji was talking, we were just looking at. For me, I put it in a SIP is a way of SIP. It's like you can use that as a tool. In SIP we have a three terms, and SIP is a systematic investment plan. But for me, the first step starts for it's the savings. Your short-term goals you invest in your debt fund, that it's the short-term goals. I is your investment, is for your investing goals, your financial goals, your long-term goals. I think earlier Ashish spoke about your retirement fund. Investing into your investment goals is a financial goals. But the last one, P, I also talk about, there is one goal we most of us may not be looking at, but the goal to be a philanthropy. I think, it is the COVID we have learned we need to give back to the society. If I can earmark some money, which is one of my investments, can go to the philanthropy. This way you are not only getting the biases out, this way you are also getting the holistic approach. I think, someone said very nicely, when life blesses financially, don't raise your living standards, but raise your giving standards. Probably that SIP, the last one, the philanthropy piece, we need to look at as one more SIP I can look at.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.